Welcome back to today's Morning Report on Tuesday the 7th of July with me, Richard Perry, Market Analyst at Tech Markets. Let's move on to Euro-Dollar now, and obviously the Euro is under pressure. It has been falling, but I don't think it's actually been falling that badly considering obviously the pressure that Greece is coming under and obviously the struggles in the Eurozone, whatever, how they are actually going to resolve this issue once and for all, the uncertainty surrounding it, etc., etc. But I don't actually think it's coming under that much selling pressure. I mean, it is under pressure to the downside, and it is falling away. However, it's sort of been falling for the past sort of two and a half weeks. Now, the interesting thing I think here is the fact that it's now back below the 1050 support line, which is, I think, a pivot level. I've used it as a bit of a line in the sand in the last few weeks, as to if you're trading, if you see the euro trading above that, I think it's generally positive. Below it, I think it's generally negative. So you're just dropping below that now, and it seems to be that if you look at the momentum indicators, certainly they confirm this sort of continued slide. The RSI falling back below 40, stochastics continuing to fall back as well, and MACD lines. And what we're seeing is now, I think, we're going to see probably a test of that Monday low last week. Now, that spike low at 109.53 was the spike low just in the immediate reaction following on from the announcement of that referendum. And it's interesting that we haven't actually seen that reaction low tested yet. So that, I think, is a key test which, if it is seen, will be very important, I think, for this market. At the moment, we've still got 109.67, which was yesterday's low, intact. That's still there, although you have just fallen below that intraday low yesterday of 110 figure. We're just sort of trading underneath that now on the hourly chart, but nothing too significant in terms of downside pressure yet. Yes, you're 50, 60 pips down on the day, but as I said, I still don't see it as a massive element of selling pressure. Just in the last hour or so, you've seen bond yields falling away again, which has probably not helped the euro, and that could be a source of it. So that pressure of falling bond yields is certainly dragging on the euro. But at the moment, we're still holding on to the 109.67. We're still holding on to the 109.53, which is last Monday's low. And though those two supports are intact, and whilst that is the case, you're not getting like ridiculously bearish yet. You've got this downtrend intact over and that's in the past week and a half, and that continues to be used. So you'd say selling into strength is still the way to play the euro, yes, but I'm just not getting too bearish quite yet. I think until you've sort of broken below that 109.53 level, I think you're not getting uber bearish once again on the euro. Below 109.53, you're looking at 108.18, which is that key May low. But it certainly looks as though that the pressure is building up, but it hasn't sort of yet broken any massive levels. So just watch out for that. But it's certainly a little bit of downside pressure on the euro, as to be expected, to be honest. Anyway, so in terms of resistance, you've got that downtrend intact. You had a minor reaction high at 110.44, also around 111 as well, and then above 111 comes 111.50. 110.95, but 111.50 also is an element of resistance as well. So I wish you good luck, and I will speak to you later. Thank you.